It's
But I appreciate you being here with us, Jen, from the Owner
absolutely.
Finance Company. I'm gonna go ahead and let you introduce yourself and tell us what you do.
Sure. Let me turn this off for a second. Hi, guys. My name's Jen. I'm part of the Owner Finance Company. I'm going to be doing about a 30-minute presentation for you guys. And then throughout, if you want to ask questions, feel free to hop on and ask, or you can wait till the end and I'll do a Q&A. But we typically do these in person and they're really interactive. So if you have questions throughout the presentation, feel free to ask them. Let me share my screen and we'll get started. Hmm.
I see it.
Got it? Okay. Let me minimize this. Okay, so what we do, guys, is we work with realtors, investors, and buyers. We provide a solution for people who cannot qualify for traditional financing. It's really easy to get pre-approved with us. We don't have any application fees, so that's great. Our application is available on our website, so they can fill it out or they can download it and they can submit it electronically. So we have it in English and in Spanish, really easy. The first page is just our basic information that we need from them, their name, address, how we contact them. And page 2 and 3 are extremely informative. And so we love that we have all this information just on the application itself, because it really does walk you through the entire buyer's process from pre-approval all the way through the closing table. And on top of that, it has examples with how to calculate your P&I and what your monthly mortgage payment's going to be. And then it has our fees, terms, and requirements all listed on the application. So your buyers know exactly what the process is going to be from the get-go. And that can be found on our website, theownerfinancecompany.com, under applications tab or forms tabs, excuse me. The great thing about our program is that your buyers can choose any home in the state of Texas. We're currently licensed only in Texas. We are looking to expand into other states, but for right now, it is just Texas. And they can pick any home they want. We work with new builds, anything that's 1 to 4. So condos, duplex, even fourplexes. There's there's no limit. We can work in rural areas, cities, so any house they want. That really differentiates us from our competitors and from having to pick from an inventory. So any house they want on the MLS or not, they can choose. We also give them the deed the day that they close, so they don't have to wait to file for homestead. They can do it right away. We don't raise the purchase price, and so they're not upside down as soon as they get into the home. Whatever's negotiated on the contract between them and the seller is exactly what they're going to pay when they're at the closing table with us. And then the day they leave with their warranty deed and their deed of trust. And then we record within 30 days. So they're the true owners of the home. This process really does mirror the traditional process. The only difference is we don't have as many underwriting requirements as a typical bank would, so they don't get turned away as easily. We work with all types of situations, people with bankruptcies, bad credit, no credit, I-10. The top 2, I would say, that we work with are self-employed and foreign nationals. A lot of people who are self-employed do not file their income taxes reflecting what they truly earn, which of course they're trying to take care of the tax advantages of not, of depreciate, or not, I'm sorry, of writing off as much as they can. But when you're trying to qualify for a loan, if you make 200,000 a year and you're showing that you make 65, you're not going to qualify for that $400,000 home. So we take into account a lot of things when we're working with our buyers, and we can get extremely creative. And so we consider ourselves creative financing. So if you have a situation, any situation that you're just thinking, would they work? Let us know, and we can walk you through if we can make a deal happen for you guys. So on our pre-qualification requirements, all they'll need to get started with us and get pre-approved is proof of funds, a valid ID or passport from any country, and then our application completed. So for the funds, they do not need to be seasoned or sourced, and we do accept cash and gifted funds. If they do have cash, we do ask that they send that photo with it in money bands and a picture of their ID. So we know that how much is in each stack. We know it's there. It's not just a Google picture of cash from the internet. So a good rule of thumb is 30%. 30% is what they're going to need. And I'll go into the breakdown of what that's going to go towards as far as down payment, fees, closing costs. But if they're looking at any home, you just have them multiply it times 30%. And if they have that in the bank, that's what they're going to need to qualify. And they, again, they can use 401ks, they can use anything that's liquidable. So going into our fees and our rates, so our interest rate is 11.9. One thing that to think about the interest rate is when we first started the company, it was about 4.5 years ago, and we were at 9.9%. So rates at that time were at 2.5, 3%. So it was a really big difference in our interest rate, quite a big spread between the 3% to the 9.9%. And as rates have increased, up and down over the last 4 years, we've only gone up twice. So we went from 9.9 to 10.9, and now we're at the highest we've ever been, which is 11.9. And we hope to be able to bring that down as rates fluctuate, but it's really not too far from what rates are right now, at least from what we've seen. It's much different than it was 4 years ago. And the reason that we have it at 11, just so that you guys understand a bit about how, we have our program structured, is we pay, if we don't keep the deal in house, we work with investors and we pay our investors 11%. So we keep the 0.9 and our investors get that 11%. So if they're getting loans at say 7.5, 8%, that spread has to make sense for them between their interest rate they're getting and what we're paying them on their note. So that's why we've had to go up, is to continue to work with our investors. We're still competitive compared to some of the rates that we've seen from our competitors. So that 11.9, that's why it's gone up, and we do hope to bring it down. All of our loans are 30-year fixed, so it's a 30-year amortization schedule, and then we charge a 5% loan origination fee, and that's off the purchase price, and that is included in that 30%. We don't have any prepayment penalties or balloon payments, so your buyers can refinance anytime that they want. A lot of our buyers have done that. They'll get into the program, they'll buy the house, and then because they want their kids in the school district, but they're going through a divorce and they can't qualify, or, for whatever reason, and then they'll keep the house for a year or two, and then they'll refinance or they'll pay it off. So the good news is that's how, they're not locked into any sort of agreement with us that they have to stay there long term. We offer it long term, but they're not obligated to stay. They can refinance anytime. So this is going to be the breakdown of where the 30% comes in. So our closing costs used to be estimated at 3%. And over the last 2 years, I would say that was just way off. At first, it was spot on. And then as taxes and insurance began to increase over the last couple of years, we noticed that at closing, we were off. We were off on our estimation of it being 3%. And what we've seen now is insurance prices have doubled. And I know someone was talking earlier about new builds, especially with new builds. Buyers get into these new builds and there's very, very low on the taxes because they haven't, there's not a house on it yet. So it's really just the land, that's being evaluated. And then when they get their tax bill, it shoots up to, double or triple what they were expecting. And that it's not just one tax, it's, multiple taxing entities depending on where you live. So we always encourage our realtors to help their buyers do their due diligence on the tax rates and how and what that's going to be, because they really have gone up. Insurance for sure has doubled on almost all of our renewal policies. We've seen such an increase on that side that 5% is a lot more accurate now than the 3% we had it at. So I'm sorry, did someone have a question? No? Okay. So for this example, this is a purchase price of 200. That's the lowest we go. We can go all the way up to whatever purchase price you need. We don't have a purchase price cap. We've closed up to a $3 million home, but we will not go below 200 because it just, the loan amount, the spread, all of that for our investors and us, it doesn't make sense or enough cash flow to do the deals. So 200 and up is our price points. The 20% down, that's our requirement right now. We hope, as loan programs change, we can bring that down. We had it at 15% for almost a year, and then that loan program got taken away, and so we're back to 20% down for these properties. So 40,000 straight to the down payment, 5% is our fee. And then we estimate the closing cost again at that 5%. So total proof of funds for a $200,000 house would be 60,000. They show 60,000 in their bank or multiple banks or gifted letters or 401s, and they can qualify for the home. So this is kind of we're gonna dive into the buyer's process. This is all on the application too, but I'll just walk through it with you guys. So once they've submitted those 3 items to get pre-approved, that we can usually get them their pre-approval letter within 24 to 48 hours. I would say same day, but just to be safe, we just please allow at least 1 to 2 days. And then they can go house shopping. They can pick, like I said, any house they want in the state of Texas. And once they figure out what house they want, you guys work with the seller, negotiate all the terms of the contract, get a signed contract, and we encourage you guys to talk to your listing agent about the process they're going through and let them know that they're going through alternative financing, because ultimately that contract is going to be changed into our investor's name or our name if we're keeping it in-house. So sometimes, if the listing agent doesn't know that there's going to be a name change, then they get weary, they wonder what's going on. But when you explain that there's going to be a name change, that the buyer's picking the house but an investor's purchasing it for them, sometimes they're a lot more excited to take your offer because they understand that they're going to have an accredited investor, someone who does this all the time, a company who's coordinating the entire transaction. And we can also provide you guys with our investors pre-approval letters whenever you're letting them know which investor is taking it. All our investors are they're accredited, they're pre-approved. They cannot be on our investors list to receive these deals until they're pre-approved. So we can get you those pre-approval letters. And also, if you want us to talk to the listing agents, we don't have any problem doing that as well. So you guys will get the initial contract, and then they will put their earnest money down at the title company to secure that property. And then once we send that deal out, we'll take the deposit, and then we'll send the deal out to our investors, and it's usually taken within minutes. And so we'll let you guys know, hey, this is who, John Abraham is going to be the investor on this deal. Can you please, rewrite the contract in his name? What you'll do is terminate that first contract, do a release of the earnest money. Our investor will put new earnest money at title, and you'll then be representing him as the new buyer. So technically you'll be representing 2 buyers, your client that's going to live in the home and our investor. All of our investors are very familiar with the process. They've done a lot of homes with us. And so, and we keep them on a group text, with me and my counterpartner, Valerie, and everything that you guys need signed or done. They're very good at getting it done immediately, paperwork for your brokerage or any, if something happens that you need to adjust the contract and do an amendment for, work on the home or whatever the case, or lease back, anything that you need signed, they're always willing to sign it. That $10,000 deposit that we take when we get the executed contract, that does go towards their cash to close. That has nothing to do with fees. If they want to move it to another home, let's say they do an inspection, or the seller's not willing to work with them about something and they want to switch it to a different house, that's fine. The non-refundable part is if they start the process, we get it going, start opening file with our lender, order appraisals, and then they back out. And now, time, money, and credit pulls were done. And that's when we keep the money. But if it's a matter of them just, wanting to move it to a different property, we allow them to do that. So that's fine. So for underwriting, there will be two different underwritings going on at the same time. For our investor, they'll be going, through the traditional lender. They'll be ordering the appraisal. We'll take care of obtaining insurance quotes and binding a policy. Your buyer will pick the policy. So we'll just set it all up. Goosehead is who we work with. And the reason we work with them is because they've already vetted the carriers that accept the owner financing arrangement. We went through 2 years of trying to figure out a solution because not a lot of carriers will cover that if you have multiple lien holders on it, which you do on this type of transaction. So this company has already vetted the companies and the carriers that accept these arrangements, and that's really great because if there's anything that happens with the home, your buyer can call directly. The insurance is in their name and they can file the claim, and they don't have to get us or our investor involved. So this process has taken a lot of time to kind of fine tune, but we do work specifically only with Goosehead. If your buyer is working with another insurance company, there's no problem with that. They can send over the policy and we can have the Goosehead team review it and make sure that it does follow the owner financing arrangements. But if they're worried about money, they can also compare the quotes and let them know what they're getting, what they're not getting. So our Goosehead team, we have one team that's completely dedicated to us that we work with, and we have the same people that we've worked with for 2 years now. So they speak English and Spanish, so great for that process. If you have bilingual buyers, we're actually bilingual all the way through the entire process, from our transaction coordinators all the way to closing. Everybody we work with is bilingual. So just so you understand, there will be two underwritings going on, and you'll be representing both, and you guys will be on all the emails. So you'll be CC'd on everything that's sent to the buyer, and then our lender will add you as a realtor to the weekly updates she gives for the investors. So you know that we're on time, keeping up with closing, and then our transaction coordinators will keep you CC'd on everything we're asking the buyers for. If the buyers have everything, if let's say like we have a house and we own it already, because we do have an inventory that they can also pick from that has lower down payments and different interest rates. Those are just properties that we do in-house, fix and flips and things like that. Those we can close in 10 days because we already own the house. So the process with the RMLO for the buyer is going to be pretty quick, as long as they can turn in their documents. And I'll get into that on the next slide, what they'll need to turn in. But just want to make sure you guys know that they will be going through an underwriting process, just not as strict as the investors. And you will be CC'd on what's going on with both the investor and the buyer and how we're staying on track. The other thing to mention here is the survey. We try to help our buyers save on closing costs as much as they can, because they get really high, especially with sometimes the underlying mortgage will want to escrow, maybe 6 months of taxes and insurance instead of the 2 that we would typically take. So we ask if there's an existing survey to please provide it with us to the title company, so the buyer can save on a few title fees. So going into the RMLO, we use NRNTD services. What's great about them is they also have a sister company, Vintage Home Loans, and that's who does our investors' loans. So it's great because the investor, while they're going through their underwriting, all that paperwork transfers over straight to NRNTD. So it's good to have them as our RMLO because they're working with both sides. They're working directly with the investor and with the buyer and keeping the deal on track, and at the same time updating us on all of it. So they will contact your buyer once your buyer signs a real estate sales contract with us. So they'll sign a real estate sales contract where we're saying we're going to sell the house to them on the date of closing. And that's what we send to the RMLO. They will ask for the buyer to provide certain documentation such as tax returns, bank statements, verification of employment. There's, I think, 7 to 9 items that they request. If your buyers don't have those items, that's okay. They can simply tell them, I don't have this, I don't have that. And that's when we'll start to get creative with them. Okay, well, what do you have? as far as proving income. The RMLO for us is here, it's mandated, of course, by the state of Texas, the Senate 43 bill, that we use one on every transaction. And that's to protect everybody involved. It protects the investor, knowing that we're going to have a buyer that can make the monthly payments. It's going to protect the buyer, because they're to make sure that they're getting all their disclosures that they should be getting, and everything that they would normally get if they were going traditionally, they're going to get the same disclosures, the same paperwork. So it's to protect everybody. We don't want them to get worried when they get to this part of the process and they're like, what? I thought I didn't have to show any documentation. They do. Their credit will be pulled, but none of that is going to affect their ability to buy the house. The main requirement is, can they make the monthly payment? As long as they can show us that they can make the monthly payment, like it can be if they get paid in cash, okay, we just need a notarized letter from the employer who pays you in cash, and that'll suffice. If they cash their checks at a check cashing place and they don't keep money in the bank, that's fine. We'll get a ledger from that place, that shows all the checks that they have. So we can get very creative in the type of money that they receive, how they receive it, and that's where we come in, where a bank wouldn't be able to do that. Their credit is, they can have, any score, and we work with them. So that's great. But that's where we differentiate, is that the only thing we really want to know is if they can make the monthly payment. We understand things happen, like bankruptcies, and life happens and people go through things. And we saw in 2020, that was one of our biggest years, was when everybody was filing for forbearance, or they weren't qualifying because one lost their job and the other, couldn't afford it on their own. So we were able to help a lot of people get into homes that could qualify, but on paper it looked really bad for traditional financing, and they don't get creative this way. So we're just another outlet that allows these types of buyers to still get into the home. All of the deposits that they make, so that $10,000, their EM, everything that they put down will go towards their cash to close, and they'll get a loan estimate at the beginning. That loan estimate is going to be pretty close to what they can expect to see on their final closing disclosure. It's going to have we do escrow for taxes and insurance, so it's going to have their P&I, their taxes, and their insurance on there. So they'll get a pretty clear indication of what their monthly payment's going to be right off the bat with their loan estimate. And then for DTI, so for DTI, like I was saying, as long as they can prove that they can make the monthly payment, we don't really look at DTI the same way as a regular lender would. So let's say they're in the 70%, but they're still able to make that monthly payment, fine. If they start getting into like 80, 90, 100 DTI, we may ask for a co-borrower. That rarely happens. In those situations, they sometimes will come to us and say, hey, well, I get this money and I get this money from this place. And we're like, okay, well, that can be considered. And their DTI comes down enough and they can still afford the monthly payment, we'll move forward. Then we'll tackle that when we get to it, but we've never had a buyer that we've turned down. We've always been able to figure out a solution for them to stay in the process and buy the home. So this, a little bit of closing details. So on the investor CD, we typically get that 1 to 3 days before the closing. Keep in mind, a lot of our investors are purchasing through their LLCs. So they're doing bank statement loans. These are investment loans. So sometimes it's the day before closing. Sometimes it's the morning of closing that we get their CD. But what we do is we take their CD and every fee just gets moved over to your buyer's CD, except for the loan origination. So that's a huge chunk. So our investors are responsible for paying their own loan origination fees and all fees associated with them getting their loans. So everything you would see in Section A on a closing disclosure, that's removed, and then everything else is just mirrored on your buyer's CD. So your buyer will be responsible for all the title fees, and that sort of thing. There'll be a year of insurance premium on there, just what you would typically see on a CD. And so their CD will include all of their credits at $10,000, our 5% fee. If there was any seller credits negotiated, their final, cash to close amount will be on that, their interest rate loan amount, P&I amount, everything will be on there, including their taxes and insurance. And so we mirror the investor CD minus that loan origination. And so that's where it's good working with the RMLO and their sister company. It's just so much less confusing the way that we do it and having those two people work together, those two companies. We do require the buyers to have their funds at least pending in our account. It says 48 hours prior to the investor's closing, but like I said, sometimes they don't have those 2 to 3 days because we get that CD just the day before. And so if that is the case and we don't have the 3 days for them to send their cash to close, what we'll do is have them just go off of their loan estimate. And if there's an overage or a shortage, then we'll settle that at closing. But we do have to have their funds clear our account before we do the closing. We've had it happen one time and never again, where we had an investor and he was at the title company ready to close. The buyer had a lot of money sitting in our account. We expected their closing funds to come through and they never did. And so our investor ended up, leaving. So we will not let the investor close until we have those funds, because you'd be surprised, people will walk away from quite a bit of money. If it's a cash transaction, we ask that they do multiple deposits to us throughout the process so that they don't have to pay a fee. If they do it all their full cash to close at one time at closing, then we do charge a 1% processing fee. So it's just easier if they do multiple deposits throughout the loan, and then we won't charge that fee. The bank charges us a fee if we do a large cash transaction like that. So it's kind of like we just pass that fee through. So if they are paying with cash, please have them do multiple deposits throughout the process. So for our loan servicer at closing, this is also part of keeping us compliant with the state of Texas, is having a loan servicer for your buyers. So they'll complete all of their paperwork at closing. They'll get their first payment letter, credit reporting authorization. Everything will be done at closing to get all the information we need to send to the loan servicer so they can set them up in their system. And then the loan servicer will be the one who sends them a welcome letter, sends them their mortgage statements. They do all of the tax reporting, send them an escrow analysis at the end of the year. They take care of, paying the taxes and insurance for the buyers. And we also they report to, right now, I think it's only 2 of the main credit bureaus, Equifax and Experian, but I think they're planning on reporting to all 3, which is great for your buyers if they're trying to establish some credit history and some payment history. That's really helpful. If they don't want that, your buyers can also opt out of the credit reporting. So just another way to stay compliant with the state and for your buyers to feel like they're in good hands. Anything post-closing, they will be referred to SecureNet. If they want to put more towards their principal payment, they can do that. They just need to contact SecureNet. If they want to do a payoff and they're ready to sell the house, they'll request that from SecureNet. So post-closing, everything will be with SecureNet. And we work extremely close with them. So anything that if they have a one-off, with your buyers, they'll contact us and let us know. So just to reiterate on the 2 to 3 closings that are going to take place, because if we keep it in-house, it's only 2 closings. If we work with investors, which we do quite a bit, there will be 3 closings. So the first closing is where everybody gets paid. That's where the investor, they got their clear to close and they close. They typically do mobile notaries. We don't really have any investors that go to the title company. So no one has to be at that closing. The seller gets paid, the realtors get paid, all the money's dispersed at that time. The second closing, that doesn't involve your buyer. That's where the investor sells the property to the owner finance company, and that's the same day. So we also do that with our mobile notary and our investors. So the first 2 closes, you guys don't need to be there. You'll get paid at the first. The second's just some paperwork that we do, and that's all same day. The very next day is when your buyer closes. So we do put one day between. So the investor closes, sells it to us, and then the very next day your buyer closes, and all of our closings are done at our attorney's office. And our notary there is also bilingual, and that's where they'll sign all of their closing documents, their all their disclosures, and just a huge stack of paperwork. That's where that all happens, is at our attorney's office. And you guys can be there. We love it for y'all to be there. It helps them feel more comfortable. They get, they take a picture with our keys, and we always encourage that our realtors go with them to the closings just in case they have questions. One of our transaction coordinators is always there for every closing. We have two offices. We have our corporate office at I-10 and Bunker Hill, and then we have our office with our attorney where we do all of our closings. And so one of our transaction coordinators will always be there to answer any questions for the buyers in case something does arise. The attorneys won't know, so we have a representative at the closing. So if you guys are there, that's great too. So they have two people in case they have questions. And that final closing is when they get their deeds, they own the home. We do record within 30 days. That's also required by the state. And it's not recorded on that 30th day. On that 30th day, it reflects the day that they close. So they can file for homestead right away. It's very typical to what you would see with the regular transaction. This is just a bit of realtor information for you guys on these investment loans that we're getting and our investors are obtaining. The max seller contribution is 2%. If your buyer wants to do something more than or your seller is willing to do something more for your buyer than the 2%, get with us and we can do something outside of closing to help them get that done. But as far as on the loan and on their closing disclosures, 2%, and on the contract, 2% is the highest that we can do. So for new builds, these work a little bit different. For the new builds, we have your buyers bring us the deposit once they pick the home, and then our investor will get that directly in their name from the get-go. So you don't have to terminate an old contract and a new one, because with new builds, that's not how it works. They write up their contract. It has to go through their system, through their management team, and through quite a chain before it gets approved. And so we in the past have tried to do it that way, get it in your buyer's name and switch it to our investor, but it can take up to 2 weeks for that change to happen. So we just automatically, for new builds, if you know your buyer's going to get into a new build, we just put it directly in the investor's name from the get-go, and we just need to make sure we have their $10,000 deposit. And then the investor will put down EM or whatever the builder is requiring, which is typically 1% EM. If it's not a new build and you're writing a regular TREC contract, we do require a minimum of 30 days. That's just mandated by our lender. And then one thing to note, we don't lend at this time on commercial properties, raw land, or mobile homes or manufactured homes. I think I mentioned earlier, the $200,000 minimum. There is no maximum for the purchase prices that we take. And then we encourage you, if you're a listing agent, to add owner financing available to your listings. It really does separate you from everybody else on the MLS. What we found is there used to be less than 1%. Now it's less than like 4 to 5% of listings that actually offer owner financing. So it really helps you bring more buyers to the table. So please add that to your listings, and you can put our information on theirs to get them pre-approved if you'd like. And we'll let you know once there's a place on our application where they can put the realtor's name, so we can keep you involved even during the pre-approval process. And we also pay $1,000 referral fee if you are not the realtor receiving commission on the deal. So if this is great for brokers, if you're the broker and your team is using our program, then the $1,000 referral fee will go to your broker. If you have a realtor friend from another brokerage that or one realtor from your team refers another realtor to us, that's dealing with a situation, then they'll get the referral fees. So as long as you're not receiving the commission on the deal and you send us someone and that deal closes, we pay the $1,000 at closing. This is just a bit of our contact information. That's our team. There's two partners other than myself, Mark and Valerie, and then our transaction coordinators are the ones standing up. They're both bilingual. You can contact us at any of our social media outlets or through email. All of our emails are the same. It's just our name at theownerfinancecompany.com. If you want to come in, if your buyers want to do a one-on-one consultation, this is where it'll be done at our corporate office, which is at I-10 in Bunker Hill off of Katy Freeway. And if you are interested in any of our trainings, we do a lot of realtor trainings. We do them once a month. We also do come to your brokerage and do lunch and learns or breakfast and learns. And we try to educate you guys as much as we can. So if you're interested in booking one of those, if your team couldn't make it today, or if you know of other people who would just be interested in learning, just follow us on our Instagram. Anything that we're doing as far as trainings will be on there. And there's also some really informative videos that we have on our YouTube channel, and just anything we have going on. The best place to find it's going to be on our social or on our website. On our website, I do want to point out that, again, that we do have a small inventory on there. Well, I say small, it's about, I think, like 10 to 15 homes on there. And so if your buyers don't quite have that 20% to put down, what they can do is look at our inventory, and there's a map and there's pictures of every house inside and out with pricing and interest rates and down payment requirements. I mean, for some of them, we have $15,000 all in total cash to close. You know, there's just a lot of different ways that you can help your buyer if they don't have that 20%. So keep in mind the inventory tab, how homes for sale on our website, if they're in the situation where they just have a certain amount of cash. And on those deals, we may have some wiggle room too. So if there's something and that they could, you know, they just need adjustment a little bit, maybe on the interest rate or the down payment, let us know, and we can probably work with them since we already have those properties and own them. We have more flexibility with what we can do as far as the fees and the terms. And that is the whole presentation. Does anybody have any questions?
On the listing side, you mentioned that if we put the uh, owner finance as as an option to put your company down, what does that look like?
We're not licensed agents, so I've actually never gone on and seen someone how they you know what they can put. But from what our other realtors say, there's somewhere that you can that you can check off if owner financing is available or not. So if there is a place, then you can check it. But I think you can also add it in the description, owner financing available. I'm not sure how much information you can put. I've never done it before, but a lot of the realtors we work with have, and that's the feedback we've got. They either just put owner financing available or they check the box.
Okay. Thank you. I'm sorry. I really meant more of for the like on the seller's side of processing the transaction and being able to. So you guys purchase the house?
Yes.
Okay.
So we purchase the house, any house they want, we buy it for them, and then we sell it to them the very next day after we close on it.
Got it. Okay. That's what I was missing. Y'all are purchasing my listing and then selling it to a buyer that wants to do owner financing.
Correct. Yeah. So if you're a listing agent and you have a lot of people coming in and you can kind of tell, like, you know, that maybe they're not going to qualify, you can just let them know, hey, there's owner financing available on this property as well. And it seems like a lot of people right now are looking for owner financing. And you know, there's a couple of companies that do it the way we do it. And then there's also a lot of mom and pops that just kind of do it on their own terms. And so we really encourage you guys, if you are going to use owner financing, vet who you're doing it with to make sure that they're compliant with the state and they don't have those balloon payments, or they're not going to get the deed, or they're going to have to rent for a year before they actually own the property. We just like to make sure to be extremely transparent with how the process works on our end, because the reason that the Senate 43 bill went into place was because people were being taken advantage of, and they didn't know they had balloon payments. They didn't understand the things they were signing. So we've been doing this for 4.5 years now, and our process is transparently consistent and always has been. So yeah, just make sure your buyers are aware to do their due diligence if they are going to use another owner financing company.
Okay, thank you.
Mhm.
I think this is a great program. I'm working with a lot of buyers who are 1099ers or self-employed and just going through the traditional process. We're having to wait, or they're having, they're being asked to redo their taxes.
Mhm.
So just, it doesn't matter if they are self-employed or 1099 or have that part-time job they hadn't been on 2 years, they could get qualified with your company.
Yeah, absolutely. I mean, I'd say our number one clients are self-employed. I mean, we have ex-basketball players, we have YouTubers, we have influencers, we have brokers who have purchased homes like at $700,000, but their tax returns do not reflect that they can afford that. So yeah, we can self-employed, as long as they can show us verification of income. They don't, their taxes don't have to be done in a certain manner. That's not what we're looking for. And that's really the point. Is there's a lot of deserving families and people who should be in homes that don't need to be renting. And as long as they can show that they can make those monthly payments, we don't see any reason why you shouldn't qualify. So yes, we work with tons of self-employed.
So the process is, say we have a listing and we do owner financing on it, and someone comes in and they want to go that route. Do we just send them to your website, or do we call you?
Either way, you can just direct them to our website, theownerfinancecompany.com, and they can fill out an application from there. It's really easy to navigate on our website, super user friendly. Or you can shoot us a call or a text and just let us know, hey, this buyer may be filling out an application. Let us know. A lot of our realtors do that just to follow up, or they'll send an email and say, I have a buyer. This is their name. Let me know, when they submit their application. And so we'll, we can keep that on track and let you guys know when they do submit something. We'll keep you in the loop. Or if they haven't, you guys can follow up and say, hey, you haven't contacted the lender, what's going on? And typically our buyers, once, if you guys refer them to us and they call us, our transaction coordinators will basically go over all this information that I went over with you in a nutshell. Not as in detail, but they'll walk them through the process, and they're great, and they'll make them feel comfortable. And some of the buyers want to come in and do a one-on-one and just, meet the company and meet us. And that's fine with us as well if they want to do that. But yes, to answer your question, you can just have them come get pre-approved. And it saves you guys time too. I mean, if you know ahead of time that they're maybe not going to qualify for traditional lending, so you're not, running around showing them homes that they won't qualify for. Once they have their pre-approval letter, you know exactly what price range that they need to stay in. And those pre-approval letters are good for 30 days. Because as far as their pre-approval, we only look at 30 days worth of bank statements.
Hmm.
And do you have any marketing materials that we can use?
Everything
To
has to
advertise?
be on our social media. You're free to use anything that we have there as far as past posts on our Instagram and our Facebook. We don't have like a flyer that we send out or anything, but a lot of our posts are really informative and break down the process. The best place to get information is going to be our application. And I can email it to you guys. I've emailed it to a few people on your team. But our application has everything that they're going to need to know. Everything I went over in the presentation is going to be on our application on page 2 and page 3. Every single thing. It's broken down really detailed so that they know from the very get-go how the process works. Again, if you have open houses, if you do a new listing, let me know or follow us on Instagram. And what we do is we share those, hey, this house is available with owner financing, open house. We help you guys market your properties as well. What's good for you is good for us. And so if you need help marketing your properties, just, tag us, and then we'll share the story, and we'll, let them know, do a timed, what is it called? A countdown to your open houses. And we'll let them know, hey, this is available with owner financing, just to help spread the word.
Nice.
Okay, this is Anisha. I have a question for you. Okay, so hypothetically, we're representing the buyer. So they go through you guys first to get approval before we submit a contract, correct?
Yes, correct. They will get a pre-approval first.
Okay, so when we write the offer, it's going to be under the name of the investors versus the original buyer that we're representing.
When you first write the contract, unless it's a new build, no, it's going to be under your buyer. And then once we get their deposit from your buyer, then we send the deal out to our investors, and then that's when you'll terminate that first contract and put it in our investor's name.
Okay, what can we assign it to you guys? Because the reason why I'm asking, because whenever we do deals with EXP, we have to upload a whole file to our portal. So it's like we have to terminate that transaction and create a whole brand new one in our portal.
It used to be where we would be able to just do an assignment contract, and then that got cut like a year into the business. And then we would do name change amendments, which was the easiest thing to do. But our lenders, the lending side has gotten so extremely strict that they don't even accept name change amendments anymore. It has to be a brand new contract. So I don't know if you hopped on a little later, but I was telling the team, I know it takes a little bit more effort and more work, but we do have to do it that way, just because of underwriting on the investor side. They won't accept a name change amendment. And also, if your listing agent is weary, or if the seller, I'm sorry, is weary about the name changing, we like for you guys to talk to them up front. And then if you just don't want to make that phone call, you can send us their contact, and we'll call them and let them know, hey, there's going to be an investor purchasing the home for this buyer. We're alternative financing, and we'll explain the whole process to them, so they know they're going to get paid at that first closing. It's going to be a smooth transaction with the accredited investor. We can provide them with the pre-approval letter. So I know it's a little bit extra work on your part, and hopefully we'll be able at some point to go back to just a name change amendment, but that's mandated by the underwriting team from our lender, and we just can't use those anymore. And I don't know why, but we're not allowed to.
So how long does it take you to get another contract? Because like Anissa said, we have to upload that information to our broker within a couple of days.
Yeah,
And
so
then-
we typically get the deals once we send them out, and as soon as we get that deposit from your buyers, that deal gets sent out to our investors. And so they take it typically within a few minutes. So we'll let you know, here's the investor's name, here's the investor's info. And so it's as quick as you guys can just terminate and then rewrite it.
To give that some thought as to how that's really going to work with the broker.
We have worked with EXP quite a bit in the past, and we haven't had any issues other than, it is just like an extra step for you guys if it's not a new build, but we haven't had any issues coming back from the broker on it.
Okay. Thank you.
You're welcome.
Just another tool in the toolbox.
So I have another
Exactly.
question.
And that's exactly what we want you guys to know. It's just that, we don't need to be your primary lender for your buyers. We just want you to know that we are available as an extra resource. If you run into a situation and you don't want to lose the deal, keep us in mind. Or if you know someone, like I said, who could use our program, just refer them to us and we will pay that. When we pay so many referral fees out, most of our business is done off of referrals. So we really appreciate those referrals. And we're here to help you guys. Any questions you have, our transaction coordinators are available constantly, and they'll text with you, email, phone calls with your buyers. They're extremely patient and very knowledgeable, and so we're just here to help if you guys run into any of these situations. And if there's something that you're thinking about, or a client you're like, I wonder if this would work with this person, just give us a call, and most likely we can figure out a way to help you out.
This is Anisha. I have another quick question. Okay, since the new contract that we the old one we terminated, and we do the agreement with the investors. So, are we going to be dealing directly with the investors to where we can do a buyer's rep with them,
Yes.
or how
The
does that work?
investor will be prepared to sign all the documents that your brokerage will need. We stay on a group text, me, Valerie, she's my partner, and our investors. And so and they're all extremely responsive and they're all great to work with. We don't have any investors that have been blacklisted or anything. The investors we have are great investors, and they're easy to contact. They respond very quickly. Their communication is great. And so if you have anything that you need signed by them, just let them know. You can also keep us in the loop so we can give them a heads up. Hey, this is going to be coming through. Please make sure you're on the lookout for it. Check your spam folder, whatever the case. But yes, they'll sign all of the brokerage documents and everything that you need.
So we basically can use all of our TREC forms, except for the contract that you all will terminate will be your own. Is that correct?
That's correct. You won't have to write the contract between your buyer and us. We will be the ones to write that on our own contract.
We lost you there for a second, Anicia.
Well, if anybody doesn't have any more questions, I just want to thank you all for taking the time to listen to me and to talk about our program. We definitely want to work with your team. So if there's anything we can do to help you, like I said, even promoting your properties, please, contact me. My cell phone and all of my information is Vanda, did you share by chance the email that I had sent you with our application? If not, I can resend it to you, and if you can send it to your whole team. So you guys have my information and our application handy, so you can also forward that to your buyers if they're interested to get started or just to learn more. I'll resend the email to you, Vanda, so you have it and you can share with your team. And yeah, just give us a call if you guys have any additional questions. We're always here to help.
All right. Thank you, Jen. I appreciate it.
Yeah, thank you, ladies. You guys have a great day
Thank
and a good
you.
weekend. Thanks.
Thank you.
All right.
Thank
Bye-bye.
you.
Bye. I don't know how to leave the meeting. Hold on. Okay, let's see.
I can stop the recording now. Let's see. How do I do that?
Okay, bye, ladies.
Okay, bye-bye.
Bye.
Stop recording.